Hello everyone, welcome to Fearfully Greedy. Airlines are famously one-way tickets to become a millionaire. The catch is that you are only welcome aboard if you are a billionaire. Since I'm no billionaire, I should be safe. Still, my thinking has always been to stay away from the sector. Recently, I have been trying to learn and delve into sectors I have always feared, like banks, insurance, maybe now airlines is the next thing. That might be pushing it for me. I came through a compelling write-up, actually not very compelling, but great wall story. Superior quality, superior economics, always according to the original poster. What tricked me into doing this video is that I have absolutely no idea what makes a good airline or if there's even any good airline around. And if I will never put money into it, I'd like to at least try understanding it. You are welcome to join. Before going there, remember these and all my videos are not financial advice. Please consult a professional or do your own research before investing. I also may hold positions on all the discussed stocks. Take that into consideration. Also, quick update on the portfolio. I add 10,000 euros to the portfolio. I bought 200 shares of Warrior Met Call, making this my second largest position in the current holdings. Now the net asset value sits at 108,000 euros with a 25.5% money weighted rate of return after 4.5 years. Let's get into airlines. I call my kind of investing, this doesn't look like the others. This can mean different things, but usually differential business model, cost structure, property, or even valuation. And ideally, multiple at once. Since this is clearly a scale business, I'll just look at the 10 biggest and then also adding LATAM and Wizz Air, which Wizz Air was the original idea that I saw the write-up. There are different commercial companies flying the sky. We can group them in big groups. Today I focus on passenger and more specifically the ones that address the general public. The companies I decided to look at are the following: Delta Airlines, Southwest Airlines, American Airlines, United, Ryanair, Lufthansa, International, Air China, China Southern Airlines, Qantas, Wizz Air, and LATAM Airlines. I thought it would be nice to start with the ultimate comparator for market share, which is revenue. Ideally to see the comparison and evolution through the years, so 2015 to 2024, all in US dollar. The three kings of the US, American, Delta, and United. Delta is the clear winner, while American is a clear loser. United is keeping track of Delta slightly behind. From the euro called Lufthansa and IAG, they are losing market share and have traded sideways in a rising market because airlines, it's a rising market. People are traveling more and more every year. LATAM and Qantas compete in their own markets, which for now have not grown as much as others. In China, Eastern gets ahead in the last decade, but in the last 2 years, Air China is cutting back. Ryanair is a clear winner in the last decade, gaining increasing importance in the global showdown. Wizz Air comes from nothing, but is growing in percentage more than anyone. What I thought is that the newcomer ultra low cost carriers, which are Ryanair and Wizz Air, really are taking a lot of capacity from big ones, but really revenues show some of that, but not the entire picture. What is happening is that ULCC can really compete in cheap lines and kind of create a market, but they are not in a big way taking away from legacy carriers. ASK is available seat kilometer. It's the capacity of the system, how many seats I have and how far I move them without regard if they are full. Now I'd like to take a look at ASK progress in a similar graphic way, but also then take a look at debt development. Takeaways. The main ASK growers are Asian companies, Ryanair and Wizz Air. If we account for 10% growth, right, from original size. So they come from a smaller size and they have grown a lot. Debt expansion will then more justified. The legacy players have grown capacity, but moderately. Southwest from a lower base, but also much more expansion than historic development, probably by Airbus and Boeing supply mishaps and rationalization of all the legacy players. Debt reduction should be happening in legacy players. Lufthansa, LATAM, and Qantas have shrunk or not moved much. No debt expansion is justified and should be generating cash. Let's see how the debt has developed. American has ridiculous back of debt in comparison and they are shrinking since 2021. Delta had very low debt, then it grew a lot in 2018 and pandemic, and also shrinking for the last 3 years. United has expanded debt until 2023, and Southwest runs a clean house with a clean balance sheet, no debt. Air China's debt exploded in the pandemic and has been pulling back since 22. China Southern has had elevated debt always, but also is pulling down since 22. Ryanair has a clean balance sheet all around, high expansion, no debt, I like that. Wizz has been running a clean balance sheet, net cash for most of its life, but since the pandemic it turned on them and currently they have 6 billion in debt. So they kept expanding probably at ill times with the press margins having to pull from debt to keep going. 12 times current EBITDA, which is crazy. A lot of airlines have gone broke at 4 times, 6 times. Maybe the margins are not like normalized, but yeah, big debt. LATAM has been flat in debt all across. Qantas has kept very moderate debt too, and Lufthansa has expanded a moderate level to a quite higher one and has kept it there. Takeaway: no one is pushing capacity like crazy. Everyone minus Wizz has lower debt in the last 2 years, which could mean trouble. First reading is that the sector passenger air transportation is definitely on the rise. I didn't need a graph to know, but clearly the world will be traveling for leisure and work much more in 10 years than now. That's the obvious number one. Okay, now let's bring the fun numbers: costs and revenues per seat and kilometer. CASK is cost per available seat kilometer. This is the amount of money it costs to move one seat 1 kilometer, and it's the efficiency of the carrier. As expected, the lowest cost provider, Wizz Air and Ryanair, are on top by quite a lot, even at a lower scale. Another surprise finding is that Southwest is barely lower cost than the other American counterparts. Who has a big advantage? Ryanair and Wizz Air have a cost advantage, but mostly is by short haul, more flights per aircraft per day, and unification of fleet. They run very similar, like not a lot of variation in their fleet, which allows them to have less maintenance costs. Let's see the other end, which is RASK, or revenue per available seat kilometer. How much are they getting per seat and kilometer? Now I see that the exact opposite, which means that carriers are accordingly charging more as they have to reflect the higher or lower cost. The important metric now is PASK, which is difference between the two. So revenue per ask minus cost per ask. Now there's some diversity and we can start to point at good players and less good players. The fact that AIG makes 40% more than United is a signal. Air China and Southern barely making any money is also a big signal, which I wouldn't touch. Still, Ryanair and Wizz kind of intrigue me because they are like middle of the pack, let's say by PASK. This goes very much together with operating margins. Let's say the progression. In operating margins, things have moved around quite a lot more, and the diversity of margins is apparent. Takeaways: Lufthansa, Air, and Southwest China and Southwest today are running paper-thin margins or negative. Delta, LATAM, Wizz, and Air China had a rough pandemic. Southwest moved from best margins in the sector to worse, which is kind of surprising. Of course, I have not been following, but surprising to me. Ryanair is the margin king, becoming the highest margin company from the ones analyzed. Not much chance. I pulled these margins from a database, so I didn't check the 260 data points, so please take this with a grain of salt. Same with all the write-up. Now I want to present you RPK. It's revenue passenger kilometers, and it's how many of those seats are full. With these two I can establish real size and in some ways how efficient the lines are. I give very high signal from the market to a player when they run saturated lines. From a size perspective, the classic legacy players are the winners on number of full seats. But if we go by passenger load, full seats compared to total seats, then Ryanair is the king and Wizz Air is right behind. Legacy players stay a bit behind at 80 to 85%, which is not terrible. The worst, surprisingly, is Air China. The lines that Ryanair and Wizz are running are very well studied. Less than 10% of seats were empty in their planes. You don't need to do much thinking to know what is going to happen in the next 10 years, or even 5. Asian travel will keep growing and growing at an accelerated pace compared to any other developed nation. Let's introduce another idea. Growth comes from getting new planes. Also, are these new planes any better? From Ryanair 2024 annual report, Boeing 737-800NG aircraft, the game changer, and especially the Boeing 737 MAX 10, they say that they are allowed to carry 20% more passengers while burning 20% less fuel, also reducing CO2, which is another ESG metric. No one is going to buy new inefficient planes. Operational costs as well as ESG again force you to grow, update the fleet with better planes. So it's a matter of who gets the new planes more than a specific one, as you see in the table. The new planes are from 45 to 25% more efficient than previous generation. I decided to pull the confirmed plane order book, current fleet size, fleet average age, lease percentage, theoretical end size, percent order book to current size, and main manufacturer. With this we can scope a bit the picture for the next few years. Takeaways: higher order percentage to the current fleet means future more efficient planes, as well as growth. Age of a fleet has to be taken into account. Old fleet requires higher order book just to stay competitive. Wizz has a ridiculous order book compared to current size, also the best fleet age in the world, and highest lease percentage. United and Southwest have a huge order book too, but taking age into account, United looks less impressive. As they expand their fleet significantly, they will probably become less efficient in the new lines. Less passenger load percentage, at least at the start. Evidence of the right ownership can be better, lowering financial costs by 10 to 20% across the entire life of the aircraft. Technology makes planes around 10 to 25% more efficient every generation, so that also comes at a cost. Increase fuel consumption difference to competitors as your own fleet ages, higher maintenance costs to take care of these older planes, and a lower appeal to customers as aircraft start to look aged. Lower fares, or maybe higher fares if you have a newer aircraft. If fuel represents 30 to 40% of an airline's operating cost, then 15% improvement in fuel efficiency could lead to an overall 4.5 to 6% reduction in total cost, which can be as much as the entire profit for a carrier. So it's nothing small, and you still have the benefits of lower capital requirements at the start and also flexibility. Let's do some valuation because I know you like this part. I listed all variables that think could have some signal. CASK, being the lowest cost provider, is a moat. Wizz and Ryanair win. For PASK, I grabbed current revenues per ASK, but historical costs, so average cost for the last few years. And here, Delta and United win. Profitability is also key. Passenger loads, efficient and saturated lines are very important, as we said. Ryanair and Wizz also win. ASK growth from 2015 to now is also important. Growth is a very important thing in this market as it's a growing pie. So Wizz, Air China, and China Southern definitely win. Enterprise value by operating income is a classical valuation metric, so I did the same historical cost but current revenues. The American players and AIG win. Enterprise value by ASK are more stable, but not all seats and kilometers are created equal, so it's probably a flawed metric, but Lufthansa, Wizz, and Southern win. Age of fleet, Wizz wins by far. Order percentage to current fleet, Wizz, United, and Southwest win. Then debt to EBITDA, a flawed metric but important as it points to the danger. It's important to see the danger. The two Chinese and Wizz look dangerously levered. I'm very happy I don't have to place a bet. I'm not owning any of them. Another read would be that ultra low cost carriers have a big cost advantage at half or a third of legacy players, and that's true. If I had to bet, I'd only consider them as the other mods just aren't. And this one is kind of fuzzy still. It is existent somewhat as Delta or Lufthansa just can't halve their cost per kilometer even if they wanted. They just can't price their tickets on lines that Ryanair or Wizz are running. So the moat does protect versus legacy, but not in between them. So another line of destruction. Let's recap as I'm not sure I have learned much. I want to stop here as I feel I'm wasting my time and maybe yours. If you know good write-ups or content on the sector, please send it my way. So the summary. Airlines don't make a lot of money. and play in an extremely competitive environment with smaller or not real moats, as planes can actually fly over moats. Or that's what it looks like. The cost per unit is the CASK and can range from 4 cents dollars for low-cost carriers to 15 cents in less dense location like Australia, but mostly around 10 cents for legacy European or American players. Then there is zero brand or pricing power, as you just price as low as you can for your cost or just slightly lower than competition. If competition doesn't come, it's because you are barely breaking even after creating or saturating a line, so they don't want any of that. They make sometimes less than a cent of dollar per seat and kilometer, but usually 1 to 2 cents. That is very dependent on full price, interest rates, labor, as well as being in a highly capital intensive business. Ooh. They have high utilization and efficiency. Close to 90% of seats are full across the entire year for all carriers. Scale helps, but it's more the efficiency of individual planes, your level of offer and seat density than any structural advantage from adding another plane. The market keeps expanding as high rates and legacy carriers capture a small fraction compared to the new carriers, offering lower costs. I feel more destruction of legacy players is on the horizon, or at least a clear possibility. But maybe regionalization prevails and things can be profitable for a while. Well, that's it for me today. I might expand on the research as I learn more, but for now, I'll see you in the next few days analyzing individual companies. Again, take care, be safe, bye bye.